Hey everyone, this is James with Yoreevo's January 2021 Manhattan Market Update, and we've been saying it for the last couple of months. The market has been stronger than expected, and that certainly continued into January. So we're going to look at both demand and supply. They're both equally important. And on the demand side, we saw a 25% increase in contract activity. And while that's a little bit slower than what we saw in December, it's actually a more encouraging data point because January of 2020 was a very strong month. So basically, you had a strong comp, strong growth on a strong comp. So very encouraging. And you can see that here where you have the 25% increase, but also January 2020 was the strongest January in at least 3 years. And it doesn't matter what price point you were looking at, we're up 20 to 30% across the board. And this shows you the monthly contract activity since 2012. And what I really want you to take away from this is December. So it was the strongest December in at least 8 years. And then this is January, tied for the strongest January in at least 8 years. So no matter what you're comparing against, very encouraging December and now January. And this shows you the contract activity per week. And the reason I included this is to show that the strongest week of the month was the last week. And that's important because it takes about 2 weeks for an accepted offer to turn into a contract. So demand that we saw earlier in January turned into contracts later in January. So presumably what we're seeing on the ground will turn into more contract activity in February as well. And one of the reasons why people might be getting off the fence is basically mortgage rates have started to uptick a little bit. And this is from our COVID blog post. It's a little busy, I know, but basically what we're trying to show here is this is mortgage rates in blue, and this is the 10-year U.S. Treasury in purple. And so they usually move in lockstep with one another. But that didn't happen during COVID. We got to break down that relationship. So the 10-year U.S. Treasury fell off a cliff, and mortgage rates didn't really move. So the spread between the two went up very high. So basically, as this has come back down to a normal level, there's been just pressure on mortgage rates just from that normalizing. Now we're back to a normal level, so you don't have that pressure on mortgage rates anymore. And on top of that, the 10-year U.S. Treasury has started to go up a little bit. So that resulted in an uptick in mortgage rates here. So maybe that's causing some buyers to get off the fence. They realize that mortgage rates aren't going to go down forever. Just a theory, but certainly something that would encourage people to buy sooner rather than later. And then on the listing side, we had fewer net new listings than we would expect. Over the last 3 years, we saw about a 10% increase going from December to January. And this year, we actually saw a 2% decline. So on top of more demand, we're seeing less supply than we would expect. So that's certainly going to cause the market to pick up a little bit as buyers realize there are fewer choices than they would expect. So here's the overall market. Here's the year-over-year change. So we're still higher than we were a year ago, but you can see a big decline in the year-over-year increase because we had that counter-seasonal January. This is just showing it by price point. And then I thought it would also be important to look at the inventory by neighborhood, because this will show you that while certain neighborhoods are improving, other neighborhoods are not. And that's certainly what we're seeing in our day-to-day operations. In markets like the West Village, where there's just less supply to begin with, you actually have, fewer apartments to begin with. You actually have fewer listings than you had last year as well. So if you're buying in the West Village, you have very few choices. So that market is going to be much stronger. Meanwhile, if you look at Midtown, there's still a ton of inventory. So we're seeing a pickup in pricing, nothing dramatic, a couple percent in areas that are limited on inventory. But if you're looking in areas that have a lot of inventory like Midtown, it's still going to be a while because the inventory levels are just so elevated. So when we look at the price per square foot, the average discount to ask, the median price point, these all are backwards looking and probably tainted, for lack of a better word, by the larger neighborhoods. So neighborhoods like the West Village, where there are like 125 listings, are going to get drowned out by Midtown, where there are 2,000 listings. So I would take all of these charts with a grain of salt. But everything is moving in the right direction, particularly in neighborhoods that have less inventory. And one other thing that we wanted to highlight, this is just an anecdote, certainly just an anecdote, but we had someone buy at a new development in July right after lockdown ended. He wasn't planning on buying so quickly, but it seemed like a really good deal, so he acted on it. We had someone else inquire in that building a couple months later, and then they revisited it a couple weeks ago, and pricing had gone up on the units they were considering by 30%. So if anybody says, pricing in Manhattan is down a ton, or pricing in new development is down a ton, you can't paint a broad brush. You have to look at it on a neighborhood basis, a price point basis, a product type basis, because you'll have wildly different trends depending on what's going on the ground right around that property. So if you're interested in diving into a particular submarket, let us know. We have all the data. We've been checking out tons of properties. We've been very active both on the buy side and the listing side, and we're happy to help you figure out what's going on, because it's not easy. As you can see, there's a lot of data points out there, and just going a couple blocks away can be a dramatically different market. So feel free to reach out to us, info@yoreevo.com. We'd be happy to help with your search and answer any questions you have, and we'll see you next month. Thanks a lot. Bye.